Shareholders of the electric vehicle mogul Tesla approved a 3-for-1 stock split at its annual meeting on August 4. Although stock splits don't impact the market value of a company, they are typically looked at favorably in that a lower per-share price may open the gate for a new wave of retail investors. For instance, if the stock split were to occur at the time of this writing, Tesla's share price would convert to roughly $291, which may be more enticing to individual investors than the $864 it currently trades at. Stock splits work without changing the value of a company because while the stock price goes down, the number of outstanding shares increases proportionately. So, in light of the recent news, should investors consider buying a stake in Tesla today? Before we get into the news, I would like to welcome you to my channel. On this channel we look at the latest news surrounding Elon Musk, Tesla stock news to name a few. I would like to announce a giveaway I will be hosting. I will be giving away a $50 Amazon gift card, and all you have to do is subscribe and like the video, and make sure you watch till the end of the video. Now let's get into the news. Enough about stock splits, let's dive into Tesla's financial condition. At the moment, the company commands 61% of the US battery electric vehicle market and 26% of the global industry. Whereas many companies are now scrambling to ramp up investments in the electric vehicle space, Tesla has been around, and the numbers show that. In its second quarter, the electric vehicle leader's total revenue surged 41.6%, up to $16.9 billion, and its adjusted earnings per share soared 56.6% to $2.27. And while COVID-19 related factory shutdowns and supply chain limitations halted production and deliveries compared to the last quarter, Tesla still managed to put together a very respectable outing. Production and deliveries climbed 25.3% and 26.5% on a year-over-year basis, up to 258,580 and 254,695, bringing Tesla's total deliveries over the past 12 months to 1.1 million. Despite passing headwinds, the company still predicts it will achieve a 50% average annualized growth in vehicle deliveries over a multi-year time horizon. Fortunately for the electric car maker, it has more than enough funding to do so. As of Q2, it boasts a cash and cash equivalents position of $18.3 billion, and the company has generated $7 billion in free cash flow in the past 12 months. For the full year, Wall Street expects Tesla's total revenue to increase 57.5% year-over-year to $84.8 billion, and its adjusted earnings per share to rise 83.8% to $12.46. Those are steadfast growth rates, especially when you keep in mind the latest macro conditions like record high inflation, off-the-charts input costs, and unprecedented supply chain bottlenecks. CEO Elon Musk's business is resilient, it always has been, and if I had to guess, it will continue to be. And considering that the stock is down 28.3% year to date, I believe it's time for prudent investors to give it a fine look. Investors should never buy shares of a company because of a stock split, rather, they should turn their attention to the underlying fundamentals of the business. In Tesla's case, the Musk-led company is the apparent king of the global EV market, an industry that is forecast to rise at a compound annual growth rate of 18.2% through 2030, according to research from Valuate's reports. The electric vehicle revolution is in full motion, and given Tesla's strong financial performance up to this point, I feel confident chalking the company up as a surefire winner in the space. Short-term headwinds may serve as a setback for now, but over the long run, this is a stock that all electric vehicle investors should have in their portfolios. Tesla CEO Elon Musk has sold Tesla stock worth almost $6.9 billion. The reason for the sale is to finance the Twitter deal if Musk loses the lawsuit. Following the announcement of the sale, Musk asserted that he is done selling Tesla stock for now. The Twitter versus Musk showdown is in full swing. Earlier, we reported that Twitter had slammed Musk's use of a publicly available bot detection tool to quantify bot accounts on the social media site. The court battle between the two sides will take place starting on October 5th. Now, to prepare for a potential loss in court, Musk has sold 7.92 million shares of electric vehicle maker Tesla to finance the $44 billion Twitter deal that it had previously abandoned. Per the SEC filings, Musk sold the shares for a total of $6.88 billion between August 5 and 9. The CEO explained his decision to offload the shares on Twitter in the hopefully unlikely event that Twitter forces this deal to close and some equity partners don't come through. It is important to avoid an emergency sale of Tesla stock. Musk further added that he was done selling Tesla stock and he will buy them back if the Twitter buyout doesn't go through. This is not the first time that Musk has dipped into his stockpile of Tesla shares. The SpaceX CEO previously sold shares worth $8.5 billion in April. Reuters notes that, combined with the latest sale, Musk has offloaded around $32 billion worth of Tesla stock in less than 1 year. Those wing doors will not get the Tesla off the ground, and new action against Elon Musk's autopilot claims might even stop them being driven manually by man, including Musk, in some places. An earlier action against Musk by the SEC resulted in him giving up his driving position as both chairman and CEO. In my first article on Tesla, on 16 November 2021, titled Tesla's Ticking Time Bomb, I strongly advised selling Tesla. The price then was $1,054.73, so it is down 18%, somewhat more than the S&P 500's 12% decline. On the 1st of that same month, the price was $1,209. Tesla hit a low of $626 on 24 May 2022, suggesting many are having doubts, with the recent bounce perhaps being caused by believers in that sky-high $1,580 forecast. To those, I would recommend they check the past and see that the price had never gone above $100 until the beginning of 2020, the price level I believe it will return to. It is down 27% YTD en route to that price. This shall probably be my last article on Tesla, as I prefer to write on companies that will gain from world developments, and those do not benefit Tesla in the way they did in the past. That should have a significant negative effect on Tesla's future performance in both the car and stock markets, and I hope this article will be of value to those holding or considering buying into Tesla now. I would emphasize here that I am not a short seller or a trader. Tesla may well suit those that are, but it does not suit me. I am an investor and I write with only that in mind. I will first touch on Tesla the car and solar panel maker and expand on the challenges it faces later. Tesla was founded by a visionary named Elon Musk. He saw an opportunity in electric cars, electric vehicles, when other car makers and especially the US and German manufacturers were mostly focused on traditional internal combustion engines, ICEs. He gained an almost cult-like following among retail investors and used the resultant share price explosion to raise over $13 billion in 4 stock offerings. Car making is a capital-intensive industry, and such low capital costs gave it an advantage to get off the ground and into the big league. Tesla also had good profit margins. Being a newcomer to car manufacturing, Tesla did not have legacy car maker problems, such as restrictive unions and large company bureaucracies to add cost, plus electric vehicles require many fewer components than ICEs. That makes Tesla's profit margins better. Gross margins were 23% in fiscal 2020, compared with Ford's 10%. That gap is closing. Tesla's superior margins over other car makers are used by many believers to justify its high valuation, but while they are good compared with many, they are not sufficiently better than the world's largest car maker Toyota to make the difference so extreme. That's it for today. I hope you enjoyed. I would appreciate it if you could subscribe and like the video, as it will help out the channel a lot. Make sure you do not forget to turn on notifications by pressing the bell icon so you do not miss the latest news surrounding Elon Musk, Tesla stock, to name a few.